Good evening, VV Nation. My name is Ryan. Welcome to the channel. Now with the market giving us some optimism, I'm seeing 3 green lights across the color guard right now. And if we just think about the current economic situation, think about it. Interest rates on the decline. Inflation on the decline. As I saw most recently, the earnings is still on the rise, giving us a number 2 bull case scenario from the truth chart within the VectorVest 7 system. Now, in tonight's presentation, I know everyone thinking about either buying a bunch of stocks right now, but I'm going to give you some of the best, most important companies in the world. We're actually going to take a look at the top 10 stocks in the world with the highest market cap. Now, that being said, some of these companies make more money than some countries' GDP. And that in itself gives me a sense of security and the dependence of these companies from the world. So I don't think they're going anywhere. So we're going to analyze these 10 stocks utilizing the VectorVest 7 system and going to give you the best opportunities out there. Now, before I do that, I do want to say this in the comment section down below, put your hottest stock in there, whether you own it, you're thinking about buying it. So that way we can take a look at some other stock opportunities in this current bull market. I do realize that there are some places in the market struggling right now, but overall, look at it. We got 3 green lights across the board, no red lights as of late. And if we go to the view section, I'm going to scroll down. We have the case 2 bull market scenario. You can see the earnings trend indicator rising, inflation falling, and interest rates also falling, which gives us this bull market scenario here. And the bull market is expected to thrive. That's the reason why I wanted to give you some of the best big market cap companies out there. Now I'm on the stock viewer. You can see we're tracking 9,337 stocks. I did resort this by market cap. I mean, look at this. If you take the top 10 of these companies, it's worth over $15 trillion. These companies are needed by the world and are not going anywhere. So let's put them in a watch list, break them down, and see which ones present the best opportunities. All right, I put these stocks in a watch list. They are in order by VST. So the stocks at the top of the list have the overall highest combination of value, safety, and timing, while Tesla, appearing at the bottom of the list, is giving us the weakest combination of the overall value, safety, and timing. Now this stock essentially is the MagSev plus 3 other stocks. Those 3 stocks, we got Taiwan Semiconductors. If you're not familiar with them, I've talked about them a lot on this channel. They are the reason behind the AI revolution. We have Broadcom, another AI play, and Eli Lilly, which has soared lately because of its GLP-1 drugs. Now, that being said, I mean, if we look at the value here, to find value in these top 10 stocks, the value plays is going to be NVIDIA. You can see price action currently at 133. We value the stock at 136. Google currently trading at 165. We value it at 228. We also have Amazon and TSM coming in fairly valued. You can see price action in the 180s is right around our valuation. And because it's within 10%, we do believe the company is fairly valued. Now, I did not highlight Meta. You see Meta here, 576. We currently value the company at $709. I've talked about Meta before, back when it was in the 300s. The stock price keeps chasing our valuation. I mean, the valuation was in the 500s just a few months ago. Now it's in the 700s. So if you want to find the most undervalued stock with the largest market cap, it will be Meta. Now, going in deeper with RV and RS, these are fundamental indicators. I mean, these being the biggest companies here, fundamentally strong across the board. But again, Tesla is the problem child here with long-term price appreciation coming in at 0.22%. So a lot of risk here. And really the VectorVest 7 system is telling us that your money is better off in a bond. Now, when it comes to safety, I mean, these are the biggest companies. Even Tesla, with all the problems it's having right now and the price action pulling back, still having an RS above 1. So if you are concerned about geopolitical or election results, you know, the market will be pretty volatile over the next few months with a lot of noise going on in the news, but these companies are the safest overall. Now, RT relative timing, these stocks are moving in an uptrend for the most part. The bottom 2, we got Microsoft and Tesla here with ratings below 1 showing us the short-term price trend is currently down. Now, Microsoft may be presenting some bottom fishing opportunities. We'll get into more detail when we get to the chart. As far as recommendations, you can see mostly buys here, a little bit of holds, but look at the sales growth rate and growth rate in earnings. All phenomenal numbers here until we get to Tesla, right? But that being said, NVIDIA leading the charge with a sales growth rate 122%. Broadcom coming into second place at 47%, followed by Eli Lilly and Taiwan Semiconductors. Now, when it comes to growth rate and earnings, again, NVIDIA taking the charge here, but in second place will be Amazon, followed by the phenomenal growth we're seeing Eli Lilly due to their new drug supply line. So you can see exactly why I like these companies in general. So let's go into the charts and break them down and see what opportunities are presenting themselves. All right, first up, it would be the crowd favorite, probably one of the most important companies in the world right now, being NVIDIA. If you saw my video last week, I'm not going to talk about NVIDIA too much on the chart today. I literally did a whole video about this last week. We saw the pennant formation here, symmetrical triangle, whatever you want to call it. Price action coming off this level of support. The video last night was on this potential breakout to the upside, which actually broke out like the following day, giving you a lot of momentum to the upside, especially for some short-term trades. But that being said, even for my longer-term traders, as long as it stays above that 20-day EMA, no reasons for concern. And if we take a look at the forecasted data down below, growth rate and earnings, sales growth rate, and our forecasted earnings per share on the rise over the last 12 months. Now here's Meta. You can see price action, lower left, upper right over the last 12 months. Gotta love that. Buy recommendations across the board. Only one little sliver of a sell, so not too much volatility over the last 12 months. You can see my clear support zone here in a worst case scenario. We're looking around $400, but there are levels of support even higher at 543 along with 527, currently trading at 577. Again, our valuation, I know I don't have it on the graph right now, is over $700. It's one of the most undervalued stocks with the largest market cap out there. That's going to be my biggest selling point when it comes to Meta. As far as the technical indicators, I mean, we see price action rolling over here with a 3 and 8, so not the best time to buy it right this second, especially it's on a down day today. But again, if you're a short-term trader, if we can stay above that 20-day EMA, or if we see some buying pressure around this in the support zone around 543, Meta is going to present great opportunities in the near future. All right, here's Google. You know, I'm an Android person, so I love Google. Price action, lower left, upper right. But look at this dip right now. If you're thinking about buying one of the Mag 7 stocks on a dip, Google will probably be the one to take a look at here. I mean, as soon as it broke its downward trend line, we've got another upward trend line forming now. So if you're a short-term trader or a swing trader, you just simply play the trend line, right? You know me, I don't like to overthink it with we don't need all these indicators, right? We got a clear uptrend here, so just have the discipline in case the price action breaks below it. But that being said, I mean, if you look at the forecasted data down below, just like some of these other companies, I mean, nice, steady stair-step fashion when it comes to growth rate earnings, the sales growth rate, and our forecasting earnings per share, all trending higher. Here we have Amazon, you know, big run we saw in the early half of this year. If I zoom into a 6-month time span, we can see the consolidation here with this triangle formation appearing. Look at the breakout to the downside, but price action is above that 20-day exponential moving average. So I wouldn't be too bearish until we break the 181 level, but with a clear rejection right at this level of resistance here and retesting this trend line to the downside, in addition to the forecasted data, the growth rate and earnings and the sales growth rate actually on the decline over the last 6 months. So that does give me reason for concern. So as far as Amazon, I'm not a buyer at this time. But I will say this, I got my mom into Amazon at $115, I believe. She's still in it right now. She's more of a longer term investor. And if you really want to approach Amazon as an investment opportunity, we did notice the valuation here. It is fairly valued right now. So if you wanted to step in or start opening a position in Amazon right now with its valuation, I do get the logic behind that, but just know that the technicals right now are painting a shady picture. Here's TSM or Taiwan Semiconductor. If I use a freehand line here, you can see the double top formation. That's going to be my biggest concern here. We did see retracement yesterday off this. Seller's still in control today. We got a gap up, but the current trading price is lower than the open right now, given the candlestick being filled in. Now, we do have buy recommendations coming in frequently over the last few months. Price action on the rise. Growth rate earnings, sales growth rate, forecasted earnings per share, all on the rise. I mean, this company is literally responsible for all the manufacturing, or most of the manufacturing for NVIDIA, AMD, and others when it comes to their AI chips. Now, that being said, TSM, it's not going anywhere. The only risk here is it's a Taiwan-based company. So just keep an eye on geopolitical concerns. As we saw with ASML, the effect of AI chip restrictions between US and China as for concerns with national security heating up. But overall, all the moving averages are in our favor, and with price action currently trading at 188.84. We're only about $5 away from this double top formation. So I'd like to see price action break above this, give up the $5 just for confirmation. If you're already in this position, just have some kind of stop in place in case it goes against you. Other than breaking news when it comes to chip export restrictions, I don't see much concern for Taiwan Semiconductor. Here we have Broadcom, just like TSM or Taiwan Semiconductor, a double top formation is appearing. We've got 1, 2, 3 rejections there. Price action over the last 2 days also retracing quite a bit. The 3 just crossed below the 8, price action remains above the 20-day exponential moving average. So I'm not going to be a buyer as of today. If you're looking for a clear level support, I'm looking at around 165, currently trading at 176, giving you a little bit of a buffer zone. Here's Eli Lilly. If you don't remember, this is one of the most overvalued companies in the list. That's going to be my clear warning, but it's in one of the hottest spaces right now, being the GLP-1 drugs. You see all the forecasted data down below on the rise. As far as the technicals, price action struggling to stay above this 20-day EMA. If you're looking for some confirmation to the upside before I take any trade, this is the level I'm looking at right now, 938. We see several touches here, all rejections on this key level of 938. I'd just like to see price action break above this. Strong volume showing me conviction. Here we have Apple. You see the triangle formation forming here. We did get a breakup yesterday, right? You saw that jump up to the yesterday. Do not like that wick at all. Currently at 230 right now. If you want to stop on it, I'm going to say this trend line here, especially if you're trading, not quite an investor. If you are an investor, you can use something like a 40-day or 200-day moving average. I mean, it is Apple. I'm going to give it some wiggle room to grow. But if you're thinking about buying it right now, on the pullback, I'm thinking if it continues to pull back, I'm thinking around 220 to 214 if price action can find a level of support right between these two zones here. Otherwise, for upside confirmation, taking out the high, never a bad idea. All right, here we have Microsoft. Over the last 6 months, this price action is actually down compared to where it was. Not surprised, it was one of the few stocks with an RT below 1 along with Tesla. But look, price action below that 20-day EMA, the 3 just crossed back below the 8, struggled to stay above it. It lasted for about a day or two, not long at all. Growth rate and earnings flatlining. 17%, it is good, but it's not growing. Sales growth rate on the decline. However, look at the earnings per share. The forecasted data is on the rise. But that being said, with the forecasted data being mixed overall and the technicals not in our favor, can't get behind Microsoft at this time. All right, and here's the problem child, gonna be the last stock this evening, Tesla, right? We can see price action down from where it was a year ago. I mean, look at the low. It was below $140, came in at $138. Looking at the forecasted data, growth rate, earnings, sales growth rate, even the forecasted earnings per share, this is actually the only one on the list I've seen so far with EPS on the decline as well. All the forecasted data, even the technical indicators, not in our favor right now. Look at this gap down. I'm going to zoom into a 3-month time span. This was the robo-taxi day. Very lackluster. I know I've talked about it before, but this is the key when it comes to Tesla. Look at the valuation here. I know I haven't looked at this on the other charts, but this stock is way overvalued. Besides Eli Lilly, this is going to be my biggest concern when it comes to overvaluation. We value the stock at $42.50. The only real justification I can see for price action to be this high is the forward-thinking projects that Elon Musk has promised us for about the last 5 or 10 years, right? The robo-taxis, humanoid robots, autonomous driving commercial vehicles. And we have yet to see that, and the event did not give investors much enthusiasm. You see the gap down, and since then, price action very flat in a channel right now. I can't get behind Tesla at this time. Even from a trader's perspective, the moving average is not in our favor right now, giving me no signs of bullish inclination. All right, VV Nation, I love going over charts. You saw exactly which stocks I liked, which ones I had concerns about. Please let me know in the comment section which hot stocks are out there so that way the VectorVest community can see your comments, take a look at these stocks, and see if there's even more money to be made. Now, that being said, I hope everyone has a wonderful evening tonight. I know it's been a while since I covered the Mag 7 and I threw in some other big cap companies there. Hope you enjoyed tonight's analysis. Again, I am bullish on the market right now. You guys have a wonderful evening, and if you liked what you saw here, make sure you hit that like button, subscribe to the channel, and I'll see you tomorrow.